got to build that story into your communication, because if you can wear the T-shirt that says "I survived 2008," the T-shirt that says "I survived 2015," right there, that's a big deal.
But it also depends on the strategy, because obviously a $10 million fund just investing in futures will get the leverage through the future, a much larger gross net exposure. If you have 50 million in that strategy, you might be too big for that strategy.
A huge segment of the credits that we see as single B are actually rated AAA.
First of all, cost of funding and LIBOR obviously up. It's costing the derivatives departments a lot of money at the moment to be funding. If you think Basel III and this idea there's no longer recognition between offsetting positions in the derivatives business.
And so there's this huge negativity which is not consistent, as we've been saying for a long time, it's not consistent with the facts on the ground.
The China hedge fund will be a bigger and bigger power force in the region.
What we're seeing globally is a concentration of assets into the larger funds.
We have seen a move to market neutral, and what I think we should see is more short credit funds.
We're in a bit of a twilight zone right now. You have a lot of the US houses just closing up shop and going back, but then at the same time you have all of these new hedge funds coming from China.
Differentiate yourself and show that you have a product that can't be replicated by indices or passive management strategies.
In Asia, there are more and more equity long-short focused funds, but there are less, credit-related arbitrage, that type of strategy. So we're actually looking for niche players.
Normally a previous track record from a large recognized brand name, which will always help them raise their initial capital.
Before, it was just purely about yield. Now it's really about a deep respect for risk.
Post-elections, definitely a sense of the last hurrah. A lot of volatility going to come in markets. Credit spreads are going to blow out. And so, a bit bearish.
The larger managers have disappointed this year in 2016. And going forward, that will bring a lot of opportunities for new managers.
You're going to see a return of fund flows to Asia. After what happened with Brexit, it's actually destabilized a lot of the long-term capital, and they're going to be looking for yield.
It was a good opportunity to meet some people that we wouldn't normally meet in the market and hear some very different views from, I think, what we would necessarily hear on our daily run-of-the-mill course of the market.
Really intimate, precise, concise panels. This type of insight is really hard to come across in most other events. You have a no-holds-bars approach to the topics. Great moderation, and to be quite frank, every year that I come back, I learn something new.